Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 14, 2019. A lot of markets having a lot of movements in the last couple of days. The one I'm going to select is going to be sugar, the ETF being cane. The reason for that is that it sets up nicely for something that's taking place here, so I just want to cover it. So with the trends, the short, intermediate, and long-term all point of the downside, the technical rating point of the downside, and we've got the accuracy for sugar also point of the downside. So basically what we're looking for is a continuation of the trend, although it's beginning to slightly bottom here. And so for the most part, you still should be looking on the short side, but just simply realize that there's a couple things that are popping up here, and the seasonals will hopefully make this a little more easier to understand. So the wave level, we had a wave low that triggered here today. So this is kind of the early signs that a base is going to form. But if you actually take a look at the market itself, this being sugar, these are daily bars here. You can see the trend to the downside, and you've had a major trend with this sideways consolidation, but another trend to the downside. And it's basically having penetrated, but is above now this support level right through here, that number being 1186. And so we're just slightly above it. So 1186 is the key thing. We also, as I mentioned, we have a wave low that triggered here. Just recently we had another trigger over here, which was a sub low. And so it's telling us that a bottom wants to form. We had been oversold and we're now starting to bounce back. There was a nice little bounce here today. Now, what also is taking place is we have the 50-day now crossing below the 200-day. It just simply tells you that the market is still in a bearish phase, and it's got to build out this this base here if anything is really going to take place. If we come back here to the website, first thing you'll see is that sugar is on the top 10 list as far as accuracy. It's not the top one, that's the DAX, but sugar is still on the list and something that you probably want to take a look at. If we actually look at what's going on with sugar on 10-year chart, blue line represents the seasonal tendencies to the market, and the black line represents what's actually taking place this year. We're in if you can see this grayish phase right through here, that's telling us that we're accurately tracking the seasonal tendencies, and what you'll probably see is a little bit of a bounce and then another little sell-off, and the more appropriate, or basically the safer opportunity to go long the market is into June. I'll call it June 1st, but the early part of June, and then we have a typically, not always, but typically we see a nice little trend to the upside. So there's still a little more pressure to the downside as we build out a base here. If I flip to the seasonal projections, what we're looking at is still a bearish outlook over the next, well, it's a 20-day forecast, and this was done last Friday. Actually, it was done yesterday. And so what we're looking at is still a bias to the market. So here, as I mentioned, June 1st or thereabouts, that's when we might see that bottom. So we still have another 2 weeks or so of base building with potentially a little bit of a bearish bias to the market. So that's why, even though there's a big bounce, there could be a further bounce because a lot of the markets are gyrating quite a bit. Just simply realize that it still needs to build out a base despite the volatility that's going to pop up here. And the way that the systems are working this is that we've been short for a while, going back to March, and then we have some here in April, another one that just recently triggered here in May, which is underwater a little bit. But overall, just on a per contract basis, we've got 4 systems that are actually out there, and a lot of them are daily systems and weekly systems. So I would suspect that if you start watching the systems here a little more carefully, what you'll see is some of the intraday systems will start to trigger. That'll help to hedge our position, hopefully build out that base that I was referring to. And once we get into June 1st or early June as a whole, Perhaps then we'll have seen a nice build out of a base and the opportunity for legitimate longer term trending markets, trending systems to really start taking advantage of the market as a whole. So for right now, the trend with all of these different indicators we have with the trend indicators, but the technicals and the seasonals, I think this wave low is telling us that a base wants to be triggered, but the trend is still to the downside. So keep that in mind. And so just in a couple of weeks, that's when you'll want to really start taking a really close look at sugar. But for right now, we're going to stick with our short trades. So with that, we will take a look at another market tomorrow. Thanks very much.